I've been investing for more than 10 years now, and in that time, I've built a portfolio worth multiple six figures. However, I've also made a ton of mistakes along the way, and I've probably cost myself an equal amount of money. So, knowing what I do now, all of these years later, let me show you exactly how I'd invest £100 today, starting from scratch. I'll go through all of the most important things step by step. I'll share the lessons that I've learned, and I'll show you the traps that you need to avoid if you're getting started. You'll then have everything you need to be able to turn this £100 into your first £100,000 and beyond. Let's get started. There's a lot to get through. First up, here's something I totally skipped when I got into investing. I had no plan and no clue what I was doing. Now, you're never going to know everything from day one. And honestly, I think that we're always still learning when it comes to being good investors. But I didn't even put any effort into learning at all. Think about it. There's nowhere in your life where you can do well without even doing some planning first. You wouldn't even go and do food shopping without at least some idea of what you needed and the knowledge of where the supermarket was. So why, when it comes to investing hundreds or even thousands of pounds of our hard-earned money, do we almost put no effort in? Now, there's no secret to this part, but I would just say that at least have an idea of what you want to achieve. Are you investing for long-term financial freedom? Are you saving for a house, or maybe trying to do something else? Ask yourself the question and then go from there with at least some kind of plan. You've also got to get your investing mindset right too. Investing is not a short-term game where you're going to get rich overnight. So you really need to switch on that long-term part of your brain and expect that nothing exciting is going to happen for quite a long time. It also comes with risk as well. And if you don't know what to expect, you could make a poor decision just at the wrong time. Believe me, I've made plenty of those bad decisions and I've fallen into all of the classic traps at one time or another. Okay, this is probably one of the most important things that you need to do before you invest your first £100 or even decide what you're going to invest in. I remember back when I started staring at the screen of an investing broker's website at all of the different account types thinking, this is all way too much. Just hurry up and let me get started investing already. I really wish that I'd taken the time to learn what I was doing, as this mistake has definitely cost me a lot of time and hassle. The reason this is so important is because the type of account you use will determine what you can do with your investments. And not only that, but it will also control the rules around taxes too, which can all add up over the long term and cost you a lot of money. Now, here in the UK, you've got three main types of accounts. You've got general investing accounts, you've got ISAs, and then you've got pensions. Without boring you all to death, the key account I'm going to focus on here will be the ISA, which stands for Individual Savings Account. There are four types of ISA, just to make your life even more confusing, but the one that's worth focusing on here for investing is the Stocks and Shares ISA. Now, this type of account lets you invest your money completely tax-free, so that any profit you make, whether that's £1,000 or £1 million, will have no tax to pay. Now, I can't stress this part enough. There is no tax to pay or worry about from any gains you make in this account. Whether that comes from getting dividends from the investments you own, or whether you sell something in 20 years' time, there is nothing to pay and you can take all of those lovely profits. Now, I've done a video covering this account in more depth if you're interested. It's a nice short video going over the details, so feel free to watch that one after this video. However, the key thing that's worth knowing is that every single tax year, starting from the 6th of April, each UK adult gets an allowance of £20,000 that they can put into their ISA accounts. This allowance is shared across all of the ISA accounts, so you can't put £20,000 into each one and add up to 80,000. It's £20,000 in total that you can put in. Lots of people get this part wrong and get a bit confused. Now, I was that person too when I started, but once I got my head around it, it's become second nature to me and something I focus most of my investing on. Now, this next part is closely linked to choosing the right type of account. When I first started, I chose to use an investing platform based on one I saw a friend using. There were so many to choose from and I had no idea what I was doing, and this option looked fine as it was just a big household name. However, if I was starting again with what I know now, I would choose my investing platform completely differently and look out for a few key things. Firstly, I'd make sure that the platform or the app had the right accounts I wanted. I know that I need a Stocks and Shares ISA, so the first job would be to make sure that they actually offer a Stocks and Shares ISA. Secondly, I want to make sure that they're reputable. I definitely want to make sure they're FCA regulated and part of the Financial Services Compensation Scheme. I don't want some dodgy company managing my money that's based offshore and isn't regulated or whatever. Next, I want to make sure I understand their fees and work out how much investing will cost me and how this company actually makes their money. Now, this can be a total minefield and is something that I wish I'd understood much better when I started. All of these little fees can really add up and eat into your returns over the long run. You've got fees like trading fees, fund fees, FX fees, and account fees, and also many others too. I've made whole videos before just talking about fees, so I won't go into too much detail here, but I can't stress enough just how important it is to understand how fees work and where you're paying money. Now, thankfully, there are lots of good options out there when it comes to getting an investing platform with all the features that you could want, the right accounts, and very low fees. Now, one of the platforms that I use personally is Trading 212. It's super easy to use, has almost no fees at all, and offers a free stocks and shares ISA. It's also got some other cool features like being able to get interest on cash, as well as offering fractional shares, which means that you can invest with as little as just £1. Now, if I was starting again today, this would be one of the platforms that I'd use. And as a little bonus to get yourself started, you can get a free fractional share worth all the way up to £100 once you open an account and deposit just £1. All you need to do is use my link in the description or follow on screen here, or even easier, once you're inside the app and signed up, just go to the promo code section here by pressing the 3 buttons, then type in the word Toby and you're all set. I hope you get a good one, and this will be a nice little bonus to add to your new investments. Now, once that's done, here's where most people start to make some really big mistakes. And believe me when I say I've made plenty of them when I was trying to figure out what I was meant to invest in. Firstly, let me just remind you that I'm not a financial advisor, and what you invest in is totally up to you. The right investment needs to be the right one for you, and all I can do is share my own knowledge and what's worked for me. When I first invested, I didn't even choose my investments myself. I let the platform decide for me, and I just picked a whole different mix of funds and stocks for no good reason really when I look back. I thought that to make an investing portfolio, you had to make it really complicated with lots of different things inside of it. The more complicated it looked, the better, at least that's what I thought in my head, but that could not have been further from the truth. I've changed up my investing so many times over the years, and if I was starting again, I can tell you that I'd keep things way more simple, and I'd try and make things as easy for me as possible in the long run. Here's the most important things I've learned in my investing journey that I would use now if I was starting again fresh. Firstly, I'd make sure that I choose an investment that's well diversified. Secondly, I choose as few as possible, ideally even just one. And finally, I try to keep any costs low. Let me just explain each one briefly before giving you some real-world examples of what this might look like. The first one should be fairly obvious. You always want to make sure that you're well diversified, as truly anything can happen. If you weren't already aware, investing can be a pretty risky thing to do, as the facts are that most businesses do not last very long. In fact, there's some crazy stats out there just about how few companies ever succeed, which once you look at them, you'll think twice about investing into any single company. There's a famous quote from a Nobel Prize winning economist that lives in my head forever on this topic rent-free. He said that diversification is the only free lunch in investing. So in practice, this means that investing in lots of different companies from different industries and from different countries too. Now, I'll show you in just a moment how I meet all of those requirements in just one single investment. Now, on the second point, it's really important to keep things simple with as few investments as possible. I've learned that the more you have, the harder it gets to keep on top of things. For example, if you want to invest your first £100 and you want to invest in 10 different things, well, how do you decide how much of your £100 should go into each one? Do you just split it equally? Do you put more money into certain investments that you like more? Or maybe you choose it based on what the weather's doing today. Honestly, it just gets so much harder the more things you have, and that's the last thing you want to do, in my opinion. Imagine in a few years' time when you have 10 different investments to manage, all of them have gone up and down different amounts. Now, how do you decide how much of your new money do you add into each one? Honestly, I think it's way too much to manage and too stressful, so all I can say from my experience is keep things simple. Now, the final thing is keeping your costs low. Every investment will come at a cost, and some investments cost a lot more to keep than others. It's the same as owning a house. You've got all of your bills to pay and your council tax as well. Now, some homes are cheap to run and others are much more expensive, but there's always a cost even if you own it with no mortgage. If an investment has a high cost, it doesn't necessarily mean that it's bad, because it could end up being the best thing that you could invest in. The issue is that any costs you pay now are guaranteed to cost you money today, but any gains in the future are not guaranteed. For example, you can easily find investing funds out there which might charge you a fee of 1% per year to hold, and they might even have a really good track record. However, there's also other funds out there who will charge you less than 0.1%. Now, all I can say is that fees are really important to keep an eye on, and a lot of this will also depend on which platform you use as well. Just take your time and make sure you fully understand what you're getting into before making any investment. So with all that said, here's what I'd buy if I was starting from scratch with my first £100 in my fresh new investing account. Honestly, I just keep things really simple and just invest either the whole £100 or the majority of it at least completely in a single, well-diversified index fund. When I started, I didn't even know what that was. So let me just explain what this is really briefly. An index fund is just a kind of investment that invests in lots of different companies which let you invest into all of them by just buying one single investment. A great example would be something like this one here. Here's one from Vanguard called the FTSE All-World ETF. If you ever need to find it on your investing app or whatever platform you use, you can use the code VWRP to get this one specifically. Remember, this is just an example. You should make sure you do your own research and find out what works for you. Anyway, in short, this index fund invests in companies from all over the world in order of their size, and it's got more than 3,600 companies inside of it. If you were to invest £100 into this fund, you'll end up getting a share in all of these amazing companies. The great thing about a fund like this is that as different companies rise and fall, this fund will change to reflect that. So over the years, this list could look completely different. It meets all of the points from the last part of the video. It's well diversified with lots of companies from all over the world. It's simple as it's just one single investment you've got to worry about. And then also it's low cost too. This fund, for example, has an ongoing cost of just 0.22% per year. So a £100 investment would cost you 22p over a 12-month period. When I started, I had no idea what index funds were, and I regret not understanding them sooner. You might also come across other indexes as well. For example, you've got the famous S&P 500 too. This is just another index, and there are loads of funds which track this one as well. Personally, I prefer to invest in a global index fund, but there are lots of people out there who will swear by an index like the S&P 500. Now, I've done a whole video dedicated to looking at the pros and cons of each, which you can find on my channel if you want to go into a bit more of the detail. I'd have no problem at all investing £100 into this fund and then just doing the same thing month in, month out. However, if you really wanted to, then you could also decide to take a smaller part of your £100 and then pick a couple of other investments too. It's truly up to you. Now, I personally do let myself have some individual company shares, but that makes up a much smaller part of my portfolio when I add everything up. For you, you might decide just to stick with a simple investment like a global index fund and then just focus on getting money in and never looking at it. Here's where it's truly up to you to figure out. All I would say though is that after doing this for as long as I have, it's very easy to get sucked into picking all kinds of different investments and making your portfolio really complicated. Like I mentioned earlier, the more complicated you make it, the harder it becomes to manage moving forward. Also, if you do want to invest in any individual companies, even household names like Microsoft, Apple, Nvidia, and Amazon, you have to appreciate that they are all going to come with a lot more risk. There is no guarantee that even big, amazing companies like that will actually increase their share price more than a global fund index will do. Also, a global index fund already has all of these companies inside of it. So if you buy more of it individually, you're basically just doubling up. Now, there's been hundreds and thousands of companies over the decades which were all good at one point, but have ended up letting their investors down. So just be really, really careful here. Also, another thing I've learned over my years as an investor is that you don't have to rush into doing anything. There's no rule that says you have to figure everything out from the start and pick all your investments and then never make any changes. It's perfectly fine that if you're not happy with something, that you can change it, but always just be careful. Everything about investing is personal to you, your situation, your level of risk, and your investment goals. Only you can decide what they are, and only you can figure out what is going to work. Just getting started, in my opinion at least, is one of the most important things that you can do. Okay, now that you've done everything else and got yourself invested, you might be sitting there twiddling your thumbs thinking, well, what comes next? The truth is that this is just the start of a very long journey, and your first £100 or whatever amount of money you've got to invest is really just the start. I'd argue it's much harder now than it's ever been to stick with a long-term investing plan because there's so much noise in the news, on social media, and here on YouTube that is going to give you a reason to stop. Long-term investing is not easy at all. It's very boring, it's very slow, and there's no guarantees at all what will actually happen in the future. And while you're trying to do that, there will be loads of other distractions and loads of other hot and exciting investments where seemingly everyone else is making loads of money. There'll be companies out there that rise in value 10 times in just a year, while you're sitting there with almost nothing thinking that you could have had your share in all of those gains. Now, all of this is easier said than done, and unfortunately, most people just won't stick with it. But if you do, let me just show you the power of long-term investing to see what could be possible. If you were able to invest £100 every month and do that for the next 20 years, we can roughly work out what you could have had if we base it on the returns of the global stock market from the last 50 years or so. £100 a month for 20 years with an annual rate of return of 9% will end up as almost £65,000. The coolest part about this is that you would have put in £24,100 and you would have made more than £40,000 from your investing. It's really exciting to look at things like this to see what's possible, but it is another reminder that these things take a long time. 20 years is a very long time and you have to stick with it all along the way. It takes 15 years out of those 20 years for your gains to start overtaking the deposits of the money that you actually put in. But once that starts to happen, things compound faster and faster, and it just gets bigger and bigger from there. Now, this is what has happened in the past, but there is no guarantee of what will happen in the future. However, if we do nothing with our money, we're guaranteed to lose its value due to inflation. I hope you found the video useful. If you want some more details on the Stocks and Shares ISA, you can follow this video right here, hopefully. And if you want some more information on different kinds of investments you can buy, I've made a handy video here going over some of the more popular ones. I'll see you in the next video. Happy investing.